What is going on, everyone? Welcome back to another video, another day, another dollar with your boy. We're going to be breaking down the futures contract per usual. Left you guys off on Friday or Saturday. I can't remember when I made the last video, but left you guys off, just kind of looking at the bigger picture, seeing how the weekly came back into balance, the daily in that same balance range. And so far this week, we've done nothing but trade inside of that range. I have not posted in the last couple of days just because there hasn't been much to post about. We're still in range, been chopping around these last few sessions. But I think it's going to be beneficial for us to go ahead and start off this video with just starting out with looking at the larger picture, looking at the monthly, the weekly, and the daily, just kind of reiterate where we're at, kind of give ourselves context to kind of, see where we can go forward. And then we'll look at the smaller time frame, such as our 30-minute time frame, where we usually look at our profile and kind of break down the market there. Kind of point out some trades that you could have taken today prior to the FOMC minutes, before the Fed minutes came out, which didn't really cause a whole lot of volatility, except for right towards the last hour. The last hour of the trading day, specifically the last 30 minutes of the trading day, was absolutely wacky. We went from the lows all the way to the highs, probing late in the day. So very strong look for the buyers, but nonetheless, this is just short-term traders. I mean, realistically, that's all it is, just short-term traders controlling this market. There really hasn't been any, massive volume here and there. But there is something I'd like to point out in our 30-minute time frame, which led me to take a paper trade. Yes, I know it's paper, but led me to take a paper trade long to see if we test the other side of the range, just because of this one thing that I've seen. And I've been testing it here and there. And so far it has proven me right. The last few times I've done a paper trade. I haven't done it with real money yet, but I'll show you exactly what that trade is here in just a second. All right, so let's look at the monthly. Monthly is one time framing up. We've been one time framing up 1, 2, 3 months in a row. You could say 4, but technically for me, this was, when we came into balance, we've been one time framing up 3 months in a row. Healthy on the monthly. All right, we're going to be looking to close out this month, at least, one would hope, especially if the market's going to do what I think it's going to do. We should close well above 5,000 in my opinion. We'd like to get back above the 5,000 level, find some more acceptance up there, and then push higher into the highs, which I think is a very good possibility, considering the sellers this week have been rather weak. They haven't gotten much extension or tempo to the downside. So yeah, to me, it's just not really looking that strong for the sell side. Monthly is one time framing up, so buyers do have that in their corner. Let's look at the weekly. I remember last week we took out the previous week's low by like a literal point or so. So it was kind of debatable whether or not I wanted to call the weekly down, or not down, but balanced on the weekly. But SPY is still technically one time framing up. In SPY, they never did take out last week or their previous week's low, but for us we did, and we took it out by 1 week. So it's just kind of hit or miss where you want to call it. For me, I'm calling it up to balance. We're now in a balance. We're going to call it a 3-week balance. So far, what we've done is, since forming our balance last week, so far we've gotten near our balance low and have rejected pretty good. And you'll see why I believe that is so once we start looking at the daily and then our 30-minute time frame. But we are just trading within this range here, from 50.6650 all-time high to 49.3650. Until we take out one side of the other of this range, we could continue to see very light volume and just kind of a whole lot of chop within this range, which is very possible. And because of that, I haven't really been trading a whole lot. I've been taking my trades here and there, and with really small size, just 2 to 3 lots of MES, which is really small size. And I've literally only taken like 2 or 3 trades, but have made out with a couple points on the day, 30, 40 points on the day, which is good for some MES. So hopefully we'll be able to transfer that down the road whenever we do start trading ES again. But for now, we're just developing that consistency. But weekly in a balance. Let's look at the daily. The daily's balance is basically the exact same as our weekly balance. So we'll look at that within the weekly balance. The balance in the weekly and the daily is the exact same balance. Yeah, it's literally the exact same balance. I think I have it stretched just slightly more on the daily down to 49.29, but I think I'm going to move that up to what we have as our weekly balance low, which is 49.3650. So far, really good hold of the 20-day moving average. 2 times now we've tested it and have yet to close below it. Now, one day doesn't make a market, but this market so far is proving to still be very strong, very healthy. But here we are. All right. Look at all these wicks here in this range below 49.50, essentially, or 49.60. All right. In that range, each time we've come down there, right? Each time we've come down into this range, we've bounced out of it. We are finding buyers right around that area. So not only are we finding buyers there, we are protecting what is called our balance low, or the bottom of the range, or the bottom of the trading range. So anybody that was short up here, right, they're covering, they're taking profits down here. And this is also providing a good opportunity for longs to kind of step into the market for a swing trade and look to push up higher. This is one of the reasons why I've decided to get long on a paper trade to see if we go and test the other side of the range. Because so far, one day, like I said, does not make a market. But looking at what we are seeing currently, and the way we close today, it leads me to believe that we may rotate and go test the other side of the range, which is up here at 50.60, basically 50.60. So 49.60, 50.60, just within that range. I think we'll go up and test the other side of that. Whether we do or not will be TBD, to be determined. So we could easily just get below the 20, take out today's low, and then take out our balance low and get this market moving down towards the 50-day moving average, which we have not tested since the 9th of November of last year. So we have yet to test the 50-day moving average. Would not be a bad area to pull back to and hold. I'm not really looking for that. If we did from the highs, I think that's going to be like, what, a 5% drop, 4% drop, about a 4% pullback, which isn't unhealthy and unlikely for this market to do, but not really looking for it currently. One thing that would tell us, right, that we could potentially do that is if we roll over and take out the weekly and the daily balance low and get this market moving and one time framing down to the downside. And by doing so, we will, most likely go and test that 48.66 level, which is right around there. Which is our 50-day moving average. All right, now let's go ahead and look at our 30-minute time frame. Just kind of review what happened today. Hopefully you guys have paid attention over the last several days, right? Monday we were closed. Tuesday we opened up with a gap down. We held that gap, ended up going out with pretty much nothing but the high and the low. Today we opened up inside the previous day's range. Worst of your risk reward. You really don't like to trade that type of price action, but there were some good risk reward trades in the market at the time. We did go out today with a price probe, which means we spiked above a certain level. So 49.87, we spiked above that and pushed up higher, right? And then got into that sell tail. So there's nothing holding this market back from going up above the 5,000 level again. Excuse me. Had to sneeze. But there's nothing keeping this market from rotating higher. There's literally nothing until the 5,009 level, 5,012.75, where we gapped down from, and we could easily continue to push up higher until that 530, and then 50, 54, 57, and then 50, 66, 50. So not a lot on the upside that's kind of really keeping us from doing that, right? Not a whole lot of destinations, just some a gap and then a high of day, right? That's literally it. Now on the downside, same thing. There really wasn't anything that was keeping this market, and this is what leads me to believe that the sellers really aren't as strong as we think they are. Even though, yes, we did gap down lower and we did hold the gap, but we never did go trend yesterday. We never did go, or we went trend, but we never did hold trend. Even with the one-time framing down, we never proved to be strong on the sell side. So we pushed down lower. Today, same thing, right? We took out the initial balance high. Great fade. Okay, so that is one prior to the FOM or prior to the Fed minutes, that was a great trade. That was a great risk reward trade because earlier in the session we had already taken out. Let me get rid of all of this support resistance bullshit. Go to the default. We had already taken out our overnight low. Our overnight low. Where was our overnight low? Hello. Our overnight low was right around 49.73. So we'd already taken out 49.73. We took it out earlier in the morning and then rotated up higher, kind of chopped around, didn't really do anything, fell to go trend up in B period, which proved to be a really good fade there. So fading the extreme, so basically new highs on the day because you weren't expecting, it's a little bit more of an advanced move to take those types of trades. But whenever you already have market generated information developed, right? Maybe you don't take it in the first 3 time frames. Maybe you don't take that trade in the first 3 time frames. But because you got in the overnight low earlier, you're inside the previous day's value, inside the previous day's range. You're more likely to go and test the low day versus the high day because we held the gap, right? Just small little nuances. And then we had a point of control that was being developed right around or at least near the open at 49.79.25. So in D period, whenever we pushed up and got above B's high, right? Got above B's high, you take the short, right? You either fade the edge 49.84.75, right? Take it above there or right around that level to rotate back into the point of control, which is down here at 79. Or you wait for it to push up a little bit more. You kind of see the market really not push. And because we are inside the previous day's range and value, that the likelihood of us holding trend is slim. And we already have established a wide point of control down here. So the likelihood of us pulling back to that area is good. And then just in general, the market was seeming a little weak. So you take the short, 49.87. Maybe you don't get that exact price. You get 49.85 when the market starts to pull back in. And guess what? You would have made pretty good money on that trade. Same thing. And maybe you didn't even want to take it on that first trade up here, right? Maybe you didn't take it there. Maybe you waited until this time frame, right? Because you got A, B, C, D, E. Maybe you wait until E to take it against D's high because you've seen that you'd failed to go trend, right? More market generated information. You've seen that you failed to go trend. Right? And then at the time, let's see, where were we at? Let's see, where was all this chop? Look at our 1 minute here. That was right around 10:30. Let's look where 10:30 led us. So you could see how we pushed up and fell, right? We pushed back up 49.85, right? That was whenever we created this high here at 49.84 or 49.85. Take the short against the previous time frame's high, right? 49.87 to come back down into point of control or maybe even rotate lower to test the other side of the range. Really good risk reward trade. And it worked out beautifully. Maybe you didn't catch the initial short. You wait for it to push back up. You take that short, right? Seeing how anywhere within this range where I'm highlighting is acting as some type of resistance. All right, we're looking at our 1 minute chart right now. You can see getting above that first standard deviation and holding above that first standard deviation kind of failed, right? You pushed above it, you failed, pushed above it, you failed, pushed above it. Guess what? You failed miserably, which led to rolling over and potentially setting the new low on the day, right? That was a great risk reward trade. That was probably the best trade of the entire day, in my opinion. Other than that, I don't see any other trade that was worth taking, really, especially after we got it moved like we did in the next time frame in F period, which led to new lows on the day. I mean, like I said, excellent trade. You take the 85.25 against 87. You're risking 2 points, maybe 3 points to the upside to rotate into the point of control down here at 79, right? So you're catching about 6 points there. You maybe take one off, and now you're targeting the low day, 73. So from 85 to 73, you're looking at about 12 points there that you can capture. Maybe you're looking for a new low of the day and to go and get this low down here even. Excellent trade, excellent risk reward trade there in my opinion. Now after that, there really wasn't any trades to the long side in my opinion, just because we had gotten the overnight low. And not only did we get the initial balance high and the initial balance low, we got the initial balance low more times than the high until late in the trading session. So that was probably the best trade of the day. Probably the only trade that I would have taken. Now, why did I take a swing trade long? Well, because after we pushed down lower, even after the minutes, or right, we got below that previous day's low. We failed to go trend. We couldn't really go trend. Look at how like wiki this is. I mean, even on our 5-minute, we can kind of see, right? We can kind of see on our 5-minute at each new low, just really wasn't much volume in that area on each new low, right? Even our Hikanashis, right? You can kind of see how wiki it was. So you just kind of knew that sellers really weren't that strong. It was more or less just weak longs getting out of the market that were trying to catch the bottom, and then just kind of kept helping push this market lower and lower. But the reason for the long and the swing trade that I got is because like I said earlier in the video, we got near a balance low and looks so far to have held, right? Looks so far to have held our balance low, and we created 11 wide point of control. There's a lot of volume and a lot of time frames traded back and forth through here, and we closed above it. And because the monthly's up, right? Looking at the bigger time frame, the monthly's up, and because we developed that wide point of control here, 11 wide right here at 78.75, we went back and forth through there. Look at all this volume that was built up here. All this volume was built up in that range. So, and we pushed through it like it was nothing in M period. Probe to the upside, which is a very positive thing for buyers, right? It's a very positive thing to see a probe above this high. Okay. Not only did we get above that high, we pushed up into the sell tail from the 20th, right? We pushed up into that sell tail, right? Where we sold off, pushed up into it, and then sold off again. So we pushed up into it and closed near the high. So once we pushed up above 49.87, I got long a couple contracts on the swing trade account, paper trade account, to rotate up and test 50.6650. Now tomorrow, if we open up and we take out today's low, I mean, I'm risking, let's see, my average price is right around that 87. I'm risking, roughly 28 points. 28 points to gain. Let's just look at the risk reward here. 28 points is what I'm risking, and I'm looking to gain 79.80. Really good risk reward trade on this swing trade. And then even if I wanted to risk it down to our balance low, saying that my stop is below the balance low, I'm risking 50 points, but I'm still making roughly 80 points. So still really good risk reward trade, even if I risk it down to our balance low and have our stop down there. So that is the reason for the swing trade on that. Just seeing the accumulation, the failure between the 2 days to kind of go trend and hold trend, even though we one time frame down, is just very, very weak in my opinion. And then we developed an 11 wide point of control, which typically, in my opinion, shows that somebody's accumulating. Just like in my last video, somebody's accumulating around that 20-day moving average to go and redistribute near the highs, is how I view it, at least in my opinion. So I like I said, I'm not professional, but that's just my opinion. That's how I view it. So yeah. All right, let's go ahead and mark our destinations. We have today's low at 59. 49.59 is today's low day. 49.59 is today's low day. We have an 11 wide point of control. We have which is right here at we're just going to say it is right here at 79.25. Technically it didn't get raised there, but we're going to call it there. We have an 11 wide point of control. So 11 time frames out of the 13 time frames that are tradable in the RTH got traded through, right? That same time frame, or that same price range, excuse me. So 11 wide point of control, boom. We have a price probe, which is where buyers want to open up against, right? Buyers want to open above this price probe of 87. So buyers want to open above and hold above this price probe. And then we have today's high a day up here at 49.98.25. Boom. There you have it. So, what do we want to see tomorrow? Going forward, what do we want to see tomorrow? Well, for starters, we want to, for certain, buyers definitely want to open above 87. Okay. If you do not open above 87, you could easily go trade back down to 79.25, 11Y point of control. If we get below 79.25 tomorrow and find acceptance below that level, you will go trade at the day's low at 59 and you will go trade at 36.50. All right. You will go trade there. However, if we hold above 87 and 79.25, you will go take out today's high at 98.25. You'll get above the 5,000 level and you will most likely fill that gap at 5,012.75. And like I said, there's literally, absolutely no ceiling until you get to 50.54. Okay? Nothing holding this market from just exploding to the upside and getting back to our balance high and our all-time high. All right? So keep your hard hats on if we do continue to chop around in this area. If we open up in today's range, right, and we don't really move anywhere, we could see a whole lot of chop around that 49.80, 49.79 level all day chop. We can see that until we get a directional move one way or the other. One thing that's kind of showing me that the trend is slowing also was to the upside at least. You know, we went from overlapping to higher value, back to overlapping to higher value to unchanged value, down to lower value, and now overlapping to lower value. So tomorrow, if we have unchanged value or higher value, that will give me even more confidence in my swing trade going forward, where I would look for the highs and then take it off at all-time highs going forward. And just for funsies, if you guys are still actually hanging around, doubt it. If you have made it this far, leave me a thumbs up for sure. But just for shits and giggles, let's look at NVIDIA, shall we? They released earnings today. Where are we at? Where are we at? This isn't showing after hours. Let's get it showing after hours. Equities. Show extended hours. Okay, it is. Let's look at the 1 minute. Well, look at that. NVIDIA closed above, right around their 20-day moving average and exploded to the upside, hitting a high of 745. Pulled back. Look at that pullback. Now you're long again. You're selling 30s, right? You bought 19, 20s. Now you're selling 30s. Excellent trade there. Especially against this area of consolidation, right? I should trade equities. But so, looks like not a bad earnings call. Looks like not a bad earnings. Let's look at it. Gaming revenue 29.8 or 2.9 billion. They net 12.29 billion. Data center revenue up 409%. Plus or minus 2%, so a little bit of slow in their revenue for the first quarter. It's not what you want to see. So showing, I think this is across the board. I mean, now we're just kind of talking here, but it just seems kind of across the board that maybe a lot of companies are about to start seeing a little bit slow in their growth overall. I think this year is definitely going to be a year of slow growth. I think the first, from what I'm seeing across the board with every company is from their forecast, they're not seeing a whole lot of growth moving forward. But nonetheless, traders are going to do what traders are going to do what's worked. And so far, buying on pullbacks has definitely been the play. Let's look at the 30-minute time frame. Yeah, buying on pullbacks has definitely been the play. I mean, you buy today's low, 63 before the earnings, and you're selling up here. Yep, 40s. Mm-hmm. Yep, $100, 100 points. Yep. Mm-hmm. All right, ladies and gentlemen, that's enough. I hope you all have a wonderful day. If you stuck around this long, I truly appreciate it. It means a lot. If you don't mind, leave a like down below. Like I said, these videos are more or less for me, and just kind of it helps me reiterate how I look at the market, and just, I'm happy with the growth that I've had so far, not only with the channel, but with myself as a trader, and as a person. So hopefully you guys are experiencing the same. This year is going to be one heck of a year. I definitely think it's going to be one of the best trading years of my life, so far anyway. Hopefully we have many more. We'll catch you guys in the next one. See ya.